Hello and welcome back to Green Pips Effects. And on today's video, I'm going to be talking about this EJ trade that we took in the community yesterday. A beautiful 1 to 8 RR trade. Absolutely amazing stuff. But before we get into it, if you are a trader and you're looking for a broker to trust and trade with, then Mugen Markets is the solution for you. The links are in the description below. Just click the link, open your account, and receive your 100% deposit bonus for your first deposit. With that being said, guys, let's get into it. So first and foremost, before we take any trade, before we do anything in the market, actually, we need to look at the trend. So I'm just going to set this. So basically, we are in a pretty bullish trend, an EJ, ever since these areas here. Now, as you can see, I was looking to go more sure here, but this trade ended up at break even at this point, and price from there just simply started breaking bullish and making higher highs and higher lows, right? So you can see we had a break bullish, a high high, another break bullish, high high right here, another break bullish, another high high right here, another break bullish. So this is so this just shows us how bullish we've been on this pair for quite a while now. So recently we had this break right here, this break, the break of this high right here. Okay, so I'm just gonna use a trend line so this can actually be straight. So we had this break at these areas here, and of course when like when the market is trending towards a certain direction, then it's more likely than not for that trend to just hold and keep delivering towards that specific direction, right? So we're always looking to target the highs, right? Whatever price will do, when in a bullish trend, price will always target the highs. So that's precisely what happened. So after price took out this high right here, we had a simple we had a simple breakout right here, and we're looking to trade this breakout right here. Now, however, this is not a breakout strategy. No, this is just a smart money strategy, a part of MMC footprint strategy, where we follow the same rules that are taught in the smart money space and in the mentorship, of course. And of course, if you are looking to get that level of knowledge, then our mentorship program is available. You can just DM us on any of our social medias, particularly Instagram at official Green Pips Effects, and we'll be more than happy to receive you in our Discord community, where you can actually get to enjoy and learn a bunch of stuff to add to your trading arsenal. So with that being said, so here we were, right? So we had this break right here, right? We always consider a break when it's done by a body of a candle and not a wick. That's why we did not consider this this charade right here. So we went for this break, and price instantly created this high. Of course, mind you that we are in the 5-minute time frame. Now, after the creation of this high, then price now had an area of imbalance, right? An area of imbalance, and below that area of imbalance, we had a demand zone. What does that mean, right? That means that this is a very strong area of demand, and prices, more likely than not, gonna come to mitigate this, because firstly, it will be filling out these orders left by smart money and the big boys, and second of all, it will be mitigating this area of demand where price could actually pick up more orders and gain momentum to go bullish and take out the highs. So that's exactly what happened. Now most of the people were confused about this. This is just called inducement, right? So price makes a high, comes down, makes a low, right? But that low does not hit any point, any meaningful point of price, right? So price just comes in, makes a low, right? But that low is just hanging in the middle of nowhere, right? And below this low, there's imbalance and there's an unmitigated area of demand. So what do you think this low means, right? This just means liquidity. So basically what we're eyeing at this point in time was so what we're basically waiting for was this low right here to be taken as liquidity, right? This low right here to be taken as liquidity, and once that liquidity was taken, price could then come in to fill this imbalance and also mitigate this area of demand, and from there price could now make its way to the top side and clear out the highs, right? So basically that's just what that's just what happened. So price comes in, um, takes out this low, fills out this imbalance, and mitigates the zone with this wick right here. But notice why I didn't enter here, right? This is a rule that we have, and it's something that I've said about in the previous videos, especially the ones concerning about sessions. So we always trade during sessions. Right now, notice this wick here, it was at 9 o'clock a.m., right? And that's pre-session time. So this is inconsiderable price action to us, right? Now, the time that we actually, get into the charts, start analyzing and looking for potential entry is normally 30 minutes after session opens, right? So the sessions on my time, they open at 9:30, and that's London session. And we normally start to look for trades during 10 a.m., right? 30 minutes after the London session opens. So I come into the market, right, at 10 a.m. and prices at this particular, this candle here, right? This green candle here. So this is the 10 a.m. candle, and this, so far what we had was basically a mitigation of this zone, of course, right? But price made a low which came from this high here, and so that means we also already have a change of character in this mitigation and return to the top side. So basically what this price right here is doing is simply mitigating this area here before going up, right? And so far, I just knew that at some point in time I needed confirmation because, there was a lot of liquidity lying at this area. So lo and behold, my confirmation was simply, so I just sat down, waiting for a good confirm, for a good reason for me to go bullish. Now, notice what happens. So, price close, price opens, this candle goes bullish, ends up closing bearish with this wick here. So price closes at this area here. Oops, sorry. So price closes, So price closes at this area here, and another candle opens, right? It opens right here. It goes bullish, goes bearish, comes in, mitigates the zone, and also takes this previous low's liquidity, and ends up closing above the previous wick. So that was basically my confirmation. So I just waited for this 5-minute candle to close, and instantly after the closure, that's when I placed my entry. Knowing that this wick had already grabbed all the liquidity needed, and price already had gained the momentum to go bullish, as this candle closed strongly bullish than bearish. So that was my entry. My stop loss was basically just below this low, and of course I was looking to target. My first target was this guy here. So this guy right here, this was my first take profit target, which I normally like to call my next liquidity run, because we always look for the run of the high first, right? So after this high was run, my trade I would close some percentage of my trade. I normally talk about that in the premium, but it is what it is. So I would close some percentage of my trade, and from there my trade would instantly go to break even. And from there I would now wait for my next take profit target to get hit, which is almost always an 8RR take profit target. So there it was, guys. So that's the overall trade, hitting plus 8RR at 60 pips. And with that being said, guys, I hope you did enjoy the video, and if you did, then don't forget to like, subscribe if you haven't, turn the bell button on for notifications. And until the next one, guys, stay safe, have a nice trading week.